morning, ladies and gentlemen. Thank you for tuning in to today's webinar in partnership with Sharjah Chamber of Commerce. This webinar will discuss the always insightful and curious topics of unified ICV and VAT. So just a very brief overview of the agenda today. Very proud to have Mr. Abdelaziz on the call from Sharjah Chamber of Commerce. I will give a very brief introduction to MBG Corporate Services, and then we'll have the experts, the directors of their relevant departments, run through the ICV and the taxation. And then we'll have an open Q&A session at the end. So if you have any questions, please send them across to us on the chat or on the question and answer section on the webinar. We will try to get back to all of you. I know there are lots of questions generated from this. If we don't get back to you today, we will get back to you and reach out to you personally to address any concerns you may have. But I'd like now to hand over to Abdelaziz just to give his perspective, and again from our side, MBG Corporate Services, thank you very much for this opportunity, Abdelaziz, to speak with your members.
Thank you very much, Oliver. Well, good morning, everyone. I would like to welcome you and thank everyone virtually for being here with us today. Of course, as Oliver said, we are pleased, of course, to welcome you to this webinar called Everything You Need to Know About ICV and VAT. We are, as the Sharjah Chamber, partnered with the MBG Corporate Services to share their expertise on this matter. We have special arranged this webinar for our members, of course, so you can learn more about the in-country value, methods and processes, and also the processes of VAT, refund, and challenges. Along with this, I would like to congratulate the Chamber and MBG for successfully organizing this webinar. We look forward, of course, to more mutual virtual sessions from those entities, as everyone in this industry is eager to learn more about how to successfully come back from this pandemic. Expect that we will continue to provide you with the valuable information that is relevant and, of course, on time. I would like also to acknowledge and thank our moderator, Oliver, for today, as well as our guest speakers, Mr. Vipin Kumar, the Director of Taxation at MBG, and also Mr. Tahir, the Director of Audit and ICV at MBG also. We are very excited about what you guys are going to share, what you're going to share with us in this discussion. We also hope that you all get the information you need after the session. And once again, a very warm welcome, and thank you for attending.
Thank you very much, Abdelaziz. So, ladies and gentlemen, I'll just give a very brief overview of MBG Corporate Services for those who are not familiar with us. Established in 2002, we now have 16 offices across 6 locations, all of those high growth markets. We service European, Middle Eastern and Asian markets with over 3,000 clients globally, and very proud to have over 100 Fortune 500 clients with us. We have over 450 staff across the globe, all fully utilized and employed by MBG Corporate Services. We do not outsource any of our work. The firm, we support organizations at every stage of their life cycle, from inception throughout the growth journey, all the way through to maturity and extension. Needless to say, during these sort of times, people are looking for guidance, support on how to deal with the developments, no matter what stage of the life cycle they're at. So we have an extremely wide range of services that enable us to support organizations wherever they are in their journey. We have their traditional audit and assurance business and taxation. Also, we are doing a lot of work on risk advisory, restructuring of organizations. On the mergers and acquisition side, we also have a legal advisory team that support organizations. We are working continuously with organizations in their strategy and transformation requirements. And obviously technology now is an area which is no longer siloed to IT. Technology is integrated in every part of an organization, and we have a fully fledged technology department to support the digital transformation. When it comes to the latest pandemic that we're experiencing, we've been flexible to the market and responsive to our clients and developed a suite of COVID-19 services, which you can see here from the risk, taxation and technology department. As a firm, we are industry agnostic. We will support organizations no matter what their industry. We have the manpower internally to be able to support and have the expertise wherever relevant. So with that all said and done, I'd like now to hand over to Tahir, who's the Director of the Audit and ICV Programme, to give an overview of the Unified ICV certification. Tahir, over to you.
Thank you, Oliver, for that. Good morning, everyone. I hope I am loud and clear. So a quick introduction about myself. I am Tahir Singaporewala, Director, Audit and Assurance with Mayur Batra Group. So I am primarily heading the External Audit and ICV Certification Services Department as well within the firm. So today we gather to discuss on the in-country value program, which was obviously the brainchild of ADNOC, but has been picking up quite rapidly across UAE. So we will discuss about what the in-country value program stands for, what are the principles and the policies behind the program, and there have been some significant changes this year, which could have a serious impact on a lot of companies. So we will be discussing on the major changes that the ICV program has gone through and the importance of it. So with that, we start off with the background on the ICV program. Oliver, can we go to the previous slide? Thanks. No, the previous slide, please. Yes. So the in-country value program is basically, as I mentioned, had been started by ADNOC in late 2017. So in across November 2017, and there were initially 6 certifying bodies as a part of the program, which has now been expanded to 12 certifying bodies. So it was run independently by ADNOC for about 1.5 years. And then late 2019 and early 2020, there have been a lot of government and semi-government companies that have joined the program and have adopted the ICV program as well. So obviously, as we see on the slide, on the screen, there are a lot of factors that goes into calculation of the ICV score. The major factors are the manufacturing and the third-party spend. So basically, this represents the percentage of the cost or the spending power of a total company that is spent in UAE, or the money that is retained within the country. Then obviously the investments made by the company, amortization, expatriate contribution, and revenue from outside UAE. So how each of these factors contribute to the ICV score is also what we will be going through when we discuss the formula as well. And currently, there are only 12 independent certification bodies within UAE, and Mayur Batra Group is proud to be one of them. Oliver, can we go to the next slide? So, like we are mentioning, the ICV program, as the name suggests, in-country value program, mainly focuses on the 3 principles which are there, which is obviously the GDP diversification. So it wants to improve the GDP of the country. That's the reason significant weightage is given to a company's expenses, which are incurred within the country itself, or all the purchases done from locally are given a higher ICV score as compared to import purchases. Then, so that by that we also refer to the supply chain localization, and job creation and amortization is the third important principle. So as a part of government's initiative, they would want companies to make sure to provide more and more employment opportunities, both across expatriate and Emirati employees. So these remain the core principles behind the ICV certification program. So these remain the same as compared to the previous version, which was the revision 2, and the revision 3, which is applicable from June this year. Oliver, next slide, please. Yes. So as I was mentioning, ICV has expanded significantly. So as it was run only by ADNOC from 17 till 2019, and then we see that there are a lot of government, semi-government companies that have joined hands. Along with ADNOC, there have been some changes in formulas and stuff, but now it has been adopted by all these institutions that are appearing on the screen. So it has been adopted by DED Abu Dhabi. So when we talk about DED Abu Dhabi, there are about 64 entities that form a part of this group, which includes right from Department of Finance to ministries to police, across basically more or less almost all the government organizations in Abu Dhabi. So that has been adopted by DED, Aldar Properties, as well as Abu Dhabi Ports. So these are just official joinees to the ICV program, and very soon we expect a lot more public, semi-public and private organizations to be a part of this ICV certification process. And as we see down, even the logo of the in-country value program, which earlier had an ADNOC logo in it, has been modified to represent just one in-country value program, which is no longer, it belongs solely to ADNOC. It is more of a program which is now on a federal level within UAE. Follow next slide, please. So we come to the basics of in-country value program. So as we see, or if I start with the basics, the in-country value is a score out of 100% that a company gets, depending on all the factors that contribute to the ICV score. So generally, it is a percentage score out of 100, which a company gets. So we have the bifurcation of the score in the first 4 columns that we see. So 50% of the score comes from the local spending. So there's a different formula for manufacturing companies and a different formula for trading and service provider companies. But generally 50% is allocated to all their local spends that they do in UAE. So this would cover all their purchases, all their procurement of materials, etc., all their local spendings for administration expenses. So that is analyzed in terms of the vendor. If the vendor is based out of UAE, they get a score on it. If the vendor is based outside UAE, they would generally lose the ICV score here. So that contributes to 50% of the total score. 25% comes from investment. So by investment, we refer to all kinds of property, plant and equipment, which are tangible fixed assets or other intangible assets or investment properties that a company is invested in. This does not include any kinds of investment in equity shares or other such equity investments, but it mainly includes all your tangible and intangible assets restricted to software, etc. So that contributes for a 25% in your total ICV score. And then the balance 25% comes from amortization, which is 15%, and your expat contribution, which is 10%. So as we see in the formula, there are clearly values bifurcated. So in terms of amortization, if a company spends up to 200,000 dirhams a year on Emirati salaries or other benefits that are paid to Emirati employees, they get a flat 2% ICV score, and then there is progressive up to 20 million dirhams. And for expats, it is based on the number of employees as well. So that contributes to 100%. Now, obviously, in some of these categories, if a company has missed out, they have a chance to make up their score through a bonus element, which is an additional 5% a company gets through bonus, which is mainly dependent on the export sales which are made by a company. So any revenue that it generates from outside UAE will contribute to the bonus 5% score. Then obviously the number of Emirati employees in a company will give a bonus element to the company, and growth in net book value. So if there is a year-on-year increase in the investment net book value, they will be eligible for a bonus. So overall, these are the major factors that contribute to the ICV score. Oliver, can you go to the next slide? So now this is important in terms of the changes that have come up in the revision 3. So earlier the formula was same under revision 2 as well, but from June this year there have been some changes made in as discussed together with the ICV committee and all the ICV certifying bodies, since there have been new joinees as well under this program. So suggestions have been taken from everyone and there are some changes. So the denominator for the third party spend, that's the first column, is now total cost. Earlier it used to be total revenue. So what happens is a company that had a higher profits or a higher revenue had a lower ICV score because the formula was faulty to that extent. So now it has been replaced by total cost. So it's a clear-cut formula which the ADNOC or other agencies are trying to analyze is what is your total cost spent within UAE, which is a part of the numerator, divided by the total cost, which is the denominator. So the more you spend in UAE, you score higher in the first category. The second column, investments. So earlier, the company used to get a flat 10% ICV score for any value of investments that it made up to $5 million. And now that has been reduced to 5 million dirhams. So now once you exceed the 5 million dirham mark, as you see in the circle below, you start getting a progressive ICV score as well. So that is a significant change because the value has been reduced significantly from $5 million to 5 million dirhams, so that companies are able to obtain a better ICV score. There are no significant changes under expats and MRP contribution. But as we see in the boxes below, so when a company purchases any materials from a local vendor who did not have an ICV score earlier, they did not get any ICV credit on it. So now that has been replaced by a flat 10% ICV score. So as a company, if I am purchasing from a vendor who does not have an ICV score, earlier I could not claim that under my ICV certification, but now I will be able to get a 10% ICV score on that, subject to the vendor being located in UAE mainland. So as we see these changes that have come under investments, as far as service providers are concerned, these are all changes which are contributing positively to the companies, and they are making sure that the ICV scores are going up as compared to the last year. So more and more companies are also recommended to get their ICV certification done or the recertification done under revision 3 as compared to the revision 2, because generally they would or they can expect an increase in the ICV score. So those are the key changes. Oliver, next slide please. I will quickly also take you through some of the key changes or some of the key important points that are there which a company needs to keep in mind for ICV certification. Obviously the first one, which was earlier not there, is now ICV certification can be done only based on financial statements which are issued as per IFRS. So as per IFRS or as per IFRS for SME, but any other accounting standards such as the UK or the US GAAP will not be accepted. So especially branches of companies who have for head offices abroad, and if they are adopting any other accounting standards, will have to make sure that their local financial statements are prepared as per IFRS in case they have plans to go ahead with ICV certification. Then we also need to keep in mind that ICV certificate is a certificate that is issued per trade license. So each trade license has its own ICV score. So even if there are companies that form or companies that have a common ownership, cannot have one ICV certificate. So what happens is in this part of the world, we generally see that the financial statements are combined to represent an overall performance of the group. But ICV certification cannot be done on a group level. So it will have to be done on an entity level. So there is no requirement of having separate audited financial statements done once again. We can rely on the independent numbers of these entities, which would tie up to the combined financial statements. But this part needs to be clear that an ICV certificate needs to be done separately for each entity only branches which are there within the same Emirates can have one combined ICV certificate. So once again, if the branches are there in different Emirates, if there is a parent company based in Dubai and it has branches in Abu Dhabi and Sharjah, so all three of them will have a separate ICV score since they are not located in the same Emirates. Then similarly, any payments that a company makes to government authorities, it is able to claim 100% ICV score on that. And like we discussed earlier, credit is given to mainland suppliers. So any purchases that a company makes from mainland suppliers, they will be able to claim a 10% ICV score on that as well. Then, one another important aspect is obviously the salaries that were paid to owners earlier were not considered as a part of salary costs because these were considered as a part of dividend declaration. But now, if the salary is paid to owners through WPS, so if it's paid on a monthly basis or if it's paid through WPS, it will be considered as a part of salary and it will be considered as a part of ICV certification under the Emirati spend or the expat category, depending on the nationality of the owner. Also, the salary of the Emirati owner is capped, so that can be done. The credit can be taken to a maximum of 120,000 dirhams per month. But the benefit over here is now this will be considered as a salary cost, so this will contribute to the ICV score of the company. Also, another change is the number of employees. So, like we have seen in the formula, the expat employees, so the number of employees that a company has on their visa or payroll, basically the ICV score is calculated based on that. So earlier, we used to take the year-end number of employees. So now, we take an average number of employees employed throughout the year. So it's a simple average, which is the number of employees at the end of each month divided by 12. So what happens is, in case there have been employees reduction during the year or any other such factors, a company was losing out on the ICV score because the year end did not reflect the right picture. And companies got an undue advantage where they had a lot of hiring done towards the end of the year. So it was not fair on both the sides. So now we will be taking an average number of headcount during the year. And also the expiry of the certificate has been revised. So earlier, the certificate used to be valid for a period of 18 months from the date of the certificate. And now it is 14 months from the date of the audit report. So there is a significant change here. So companies are recommended to get their ICV certificate done immediately after the audit is finalized or the audit report is issued, because the ICV certificate validity is based on the date of the audit report. So no matter how much you delay your ICV certification, your ICV certificate will be still only 14 months from the date of audit report. So the validity or the use period of the certificate will reduce in case there is a delay in getting the ICV certification done. So these are some of the key points that the companies need to bear in mind. Oliver, next slide. So these are just some other points which are not such small changes which have been made under the ICV program once again. So one thing is, for all the companies that have got their ICV certification done under revision 2.0 can approach the same certifying body to get the certificate revised under 3.0 at no additional cost. And then obviously, as we see, right to use assets, because since IFRS 16 has been implemented as well, so companies have been creating a right to use assets from this year, from 2019 balance sheets. So that does not contribute as an investment made by the company. So that will not be classified as an investment. At the same time, any expenditure on CSR activities will not be forming a part of the total cost. So these are some other points. Oliver, next slide. And especially, I will quickly want to touch on the ICV improvement plan as well, because companies who are new to this program will have to understand that how this program works, right? So basically, ICV has a significant weightage, especially when you're bidding with contracts with ADNOC, DED, Aldar or Abu Dhabi Ports now. So any company that is bidding with any of these organizations, about ICV score is given more weightage. So even if the companies have quoted X value, if their ICV score is the highest as compared to the other competitive firms that are participating in the tender, they will be given the first right of refusal. So that is a significant competitor advantage that a company can have by having a good ICV score. Obviously, ADNOC and other bodies will try to negotiate on the pricing with them later on, but they have or they get a chance to negotiate with ADNOC because of having a good ICV score. So now when we talk about having a good ICV score, there are two elements to it. One is an ICV certificate score, which is done based on your past financial statements, which a certifying body will be issuing based on your past financial statements. And then companies who participate in tender also submit an ICV improvement plan. So by ICV improvement plan, they forecast what will be their ICV scores for the coming 4 to 5 years. So ADNOC also gives weightage to that. And if a company is showing an upward trend, their current ICV score will be considered as an average of their ICV certificate score and their ICV improvement plan score. So company can claim advantage currently by showing a good ICV score in the future, a good expected ICV score in the future. So we are currently providing advisory and we work along with clients to make sure that how the ICV score can be improved in the future, what are the various actions or the timely actions that they will need to be taken. And we also work on a quarterly monitoring with our clients to make sure that they are working or the correct or the necessary steps are being taken to make sure that the ICV score is on the right track, or in kind of any steps or actions, remedial actions that needs to be taken are taken before the end of the year. Because in case a company is not able to achieve the ICV improvement plan score, there are penalties stipulated along with it. So it's a double-edged sword. We need to make sure that we are as aggressive to provide a good improvement plan to ADNOC so that it helps us to win the tender. But at the same time, we need to make sure that it is achievable and we are able to achieve that score in the future as well. Yes, so Oliver, next slide. So there are a lot of areas that needs to be considered while preparing an ICV improvement plan, right from legal to finance to HR to procurement, because all these areas will affect the ICV score in the future as well, because depending on what are the HR recruitment plans of the company, what are the vendor selection policies of the company, what are the other, maybe the legal restructuring plans, because all these could have effect on diversification of assets, employees, etc., and will affect the ICV score in the future. So we work along with clients on all these areas to make sure that the best plan is derived for the client, to make sure not only the current ICV score is optimized, but also a good plan is put in place for them so that they are able to optimize their ICV score in the future and they are able to take the benefit in tender bidding and other processes with a lot of government institutions now across Abu Dhabi. So that's with the ICV and the ICV improvement plan. I think I will pass over to Vipin now, and I will be available for any questions that are there at the end of this session.
Thank you, Tahir.
Over to you.
Ladies and gentlemen, I'll now introduce the next speaker, the Director of Taxation at MBG Corporate Services, Vipin Anuja, who has a wealth of experience with tax. This session will focus on some of the refund issues, the opportunities, and I'll let Vipin take over from here.
Yeah. Thanks, Tahir, and thanks, Oliver. Today, I'm going to talk about VAT refund procedures, related challenges, and some industries who are always into VAT refundable position. So before proceeding into the refund procedure, firstly, let's understand the taxable cycle of a company. when any organization, even a highly successful one, or any small companies, whenever they experience a sudden financial downturn, it may need to consider such option as reworking its financial structure or maybe redefining policies for taxation. So during this COVID time, where almost all companies are facing liquidity challenges, so it is the best time to apply for VAT refund. So next slide, please, Oliver. So first of all, I will explain what is the procedure of VAT refund. FTA has given a very simplified process for VAT refund. FTA will take 20 working days to process the VAT refund application. Within 20 working days, FTA will tell us whether they are accepting the VAT refund or they are rejecting VAT refund. So the overall procedure is, first of all, the company has to log in on the FTA portal, and there is one separate form, VAT refund form, VAT 311. We have to insert the IBAN number of the company, and we have to submit this VAT refund form 311. This is a separate VAT refund form, which is separately we have to fill apart from our return. And after submission of this VAT refund form, within 20 working days, FTA will come back to us. And what will be the overall procedure? First of all, FTA will ask us to provide the data into the Excel sheet. They will send us one Excel sheet we have to fill in. And in this Excel sheet, FTA will ask us to provide the sales data, purchase data, import, export, everything. Means whatever business model you are referring, they will ask data in relation to your business model. Then the next stage will be based on the data and information provided by us. FTA will ask us to provide some sample purchase invoices, sales invoices, custom declaration, import and export. And if you are into free zone, specifically, they will ask us to provide FZ in and FZ out custom declaration to check out of sales transactions. Then in the next thing, FTA can ask us to provide some contracts. For example, rent agreement. They can ask us to provide employment agreement, agreement with the employees, and some other invoices, for example, telephone invoices or some invoices for insurance, etc. So FTA will review, and if they will found that all the data and information provided by the company and all the documents like purchase document, sales document, import declaration, export declaration, if company has, then they will give us the refund. And after approval of refund, within 5 working days, company will receive the refund amount into the bank account directly. They are not going to give us any check or cash. So all the companies will receive the refund amount into the bank account. So this process is very, very simple, I would say. But where the companies are lacking, why for 2.5 years has already been passed, and still many companies are facing challenges to get the refund on the bank account. So what are the reasons? I will mention one by one all the reasons, but before going into the reasons, I want to explain what are the industries which are always be into refundable position. Next slide, please. Next, yes. So there are some industries which are always be into refundable position. For example, airline industries. Article 33 of VAT Executive Regulation says that international transportation services for passengers shall always be zero rated. So all the airline company who are involved in international flights, so their supply will be zero rated. That means whatever supplies these companies are procuring from UAE, so they can claim the input tax credit and VAT refund. The same like catering services in international airline. Again, Article 33 says that if any company is supplying any goods or services into aircraft, these goods and services will be subject to zero rated. That means all these flight catering companies will always be into refundable position. Then duty-free shops. Duty-free shops, there are 2 areas, departure areas and arrival areas. If any duty-free shop company, if they are selling into departure area, it will be subject to zero rated. And if they will sell into arrival areas, it will be subject to 5%. So all the duty-free companies, if they are selling into, of course, they are selling into departure area, they can claim the VAT refund. Then laboratories, supply of any preventive healthcare services is subject to zero rated in UAE. So all the companies who are into laboratory business or health check services, they can claim the VAT refund on all the supplies which they are procuring in UAE. Then pharmacy business, all the companies who are into pharmaceutical products, whether it's equipment or medicines, shall always be zero rated as per UAE VAT law. So all those type of companies can claim the VAT refund if they are procuring any goods or services in UAE. Then next sector is hospital sector. Any supply of healthcare services is zero rated in UAE, but we have to think this should be only B2C supply, not B2B. For example, if any lab is providing any services to hospital, this will be subject to 5%. But if any hospital or lab is providing any type of service to the consumer directly, it will be zero rated. So they can claim the VAT refund anytime. Next slide, please. Then third port shipment, like I would give one example. There is one company who are supplying goods to Africa and procuring goods from China. In our example, the goods are going from China to Africa directly, but we have our full-fledged company here. We are procuring some material from here also. We are doing some expenses. So what's about their VAT refund? So whether they can claim the VAT refund on their expenses or not, the answer is yes, they can claim the refund. There are a lot of companies in free zone and designated zone who are specifically involved in third port shipment. So all those companies who are into third port shipments, they can claim the VAT refund as per UAE VAT law. Then next is a designated zone. VAT designated zone means all those free zones as per UAE VAT law, which has been defined as a designated zone. Like for example, Jabal Ali free zone, Dafja or SAF free zone. If we are supplying any goods or we are supplying any goods from these designated zone to outside UAE, then these supply will be out of scope supply, and the companies would be able to claim the refund for all the goods and services which they are procuring from UAE. Then international tour and travel industries and travel agent, because whenever they are supplying any services in relation to international transportation, it will be subject to zero rated. So they can also claim VAT refund on their goods and services which they are procuring in UAE. Oil and gas, if any company is into business of oil and natural gas, if they are supplying oil and gas in UAE, reverse charge mechanism will be applicable onto the customers. So that means these companies need not to charge VAT on their supply. So whatever goods or services they are procuring in UAE, so they can claim input tax credit, and finally they can claim refund as well. Then next industry is real estate, residential building. If any developer is in the business of supplying residential property, the first supply will be zero rated and next supply will be the exempt supply. So for all the fresh supply, new supply, they can claim the input tax credit for all the construction expenses. Next slide, please. All the educational institute, they will always be into a refundable position. Whatever services they are procuring in UAE, whether these educational institutions are nurseries, preschools, schools, or higher educational institute, they can claim a VAT refund. The next industry is export of exempt financial services, like bank. If any bank is providing any services here in UAE, this will be exempt supply. But the same services, if these banks are supplying to a company which is outside UAE, this will be zero rated supplies. So financial institution can claim input tax credit and VAT refund for all the services which they are providing outside UAE. Then VAT refund for locals, Emirati. So any persons who are doing construction of any building for their own house, own residence, they can claim all the input tax credit for all the expenses done for their residence. Then a logistics sector, it's a big sector, like in Jabal Ali Free Zone or DWC, there are a lot of big companies who are involved into international logistics. So their supply will be always is zero rated, they can claim input tax credit for all the expenses done in UAE. Then vessels for international transportation of goods. All the vessels, whether it's ships, boats, if any company is doing supply of ships, boats, either sale or renting, it will be subject to zero rated, and the companies can claim input tax credit and VAT refund as well. And the last will be export oriented business. Any company is in UAE mainland or any company in any free zone, if they are doing export. So if they are into mainland, it will be subject to zero rated. And if any company in free zone, if they are doing export, it will be out of scope transactions, and they can claim all the input tax credit, whatever expenses they have done in UAE, they can claim input tax credit as well as VAT refund. Next slide, please. So these were the industries which can be always be into refundable position. As I have already mentioned that the VAT refund process is very simple, but still many companies are facing challenges to get the VAT refund. And where are the challenges and what type of questions or documents FTA is asking during the audit? I would say whenever any company is applying for VAT refund, FTA is doing a sort of audit. So first of all, what type of queries FTA can ask to the companies? First of all, they can ask like whether the company is claiming input tax credit on motor vehicle or personal expenses, because as per UAE VAT law, company can claim input tax credit on any expenses of motor vehicle if it is only used for the business purpose. So ideally, company should have first of all policy that any employee, if they are using the motor vehicle of company, it will be used only for business purpose, and company has to prove also that motor vehicle has been used only for business purpose. So this can be a first problem to prove that how company would be able to prove that cars and motor vehicles has been used only for the business purpose. Then next is insurance. As per UAE VAT law, insurance of the employee, company can claim input tax credit on the same. But what's about insurance of dependent of the employee? If any company is providing insurance, free insurance of the dependent of employee, company cannot claim input tax credit of dependent of employee. So many companies we have seen in the past 2 years, many companies are claiming input tax credit of that insurance. So this can also be a problem. So whenever any company is going for VAT refund, they should ensure that company has not claimed any input tax credit on insurance of dependent. Then next is when company will apply for refund, they have to provide sales invoice, credit notes, custom documents, custom bill of entries or custom exit certificate on sample basis. So company should maintain all these documents time to time, and these documents should be correct as per UAE VAT law also. Then the next point can be input tax apportionment. Like if my company is involved in any exempt supply, I cannot claim input tax credit for the same. But many companies unknowingly, they are claiming all the input tax credit for the same, and this will be a challenge while claiming the VAT refund. Let's say one example, my company is into real estate and I am supplying residential real estate supply. This is exempt supply, but I am claiming all the input tax credit. So this can be a challenge in the VAT refund procedure. Then next is how you are preparing your reconciliation. There can be a difference between trial balance data and the VAT return. Like one example can be advance receipt. Today, if I am receiving any advance in my business, this is not a revenue as per IFRS, but I have to show into my VAT return because as per UAE VAT law, I have to pay VAT on advance receipt. So always there can be a difference between my financial statements data and my VAT return. Company should be ready with the reconciliation statements every time, because whenever FT will ask you to provide any data during VAT refund process, of course they are going to match VAT return with the financial statement. So if there is any difference, of course, FT will ask why there is a difference. So we should be ready with our answer. We should be ready with the quarter-on-quarter or month-on-month reconciliation statement that these are the reasons for the difference in VAT return as well as financial data. Then company should maintain all type of records, and it involves all purchase invoice 100%, then expense invoice, then sales invoice, and custom declaration, whether it is for import or export. Next slide, please. Oliver, yeah. And next is classification regarding out of scope supply. We have seen many companies who are specifically into VAT designated zone or free zone. Whenever they are supplying to the mainland or they are supplying to outside UAE, they are showing zero rated supply, but this is not correct. Because as per UAE VAT law, all the free zone for VAT purpose, they are outside the UAE. So if I'm doing any supply from outside UAE, these are out of scope supply. So whenever these type of companies are applying for refund, they should ensure that they are following correct tax position. Then the next point can be whether companies has maintained the different type of ledger like purchases, sale, input tax, output tax, VAT not claimable ledger. We have seen some practical example when FTA has asked companies to provide like for the detail of VAT non-claimable ledger. Like in last 2.5 years, if any companies has not claimed any expenses, so they should be ready with the record, because we have seen that companies are adding into the cost directly. But this is not correct, because as per UAE VAT law, whether you are claiming VAT on any expenses or not claiming, we have to prepare the records into our books of accounts. Next is whether company is providing full details in invoice like TRN, name of customer, invoice number, amount, VAT, etc. We have seen in many accounting system, they are collecting very less data. Like I am doing any sales, so I am just mentioning the name of the customer, TRN, and amount, etc. But for example, if your company is involved into export, you have to get lot of information apart from these few information, like custom exit certificate, custom bill of entry number, for import custom bill of entry number. So all these type of detail should be there into your system. Then next challenge can be whether company is maintaining AD currency while invoicing in other than AD currency. We have seen many companies who are specifically into export, they are not converting into currency, UAE currency, that is AED. So this is a means company get penalty, because if any company is raising any invoice which is not as per UAE VAT law, 5,000 dirham per invoice is the penalty amount. So as per UAE VAT law, whenever you are raising any sales invoice, you have to convert into the AED as well. And the last one will be whether company is maintaining all the agreement like employment agreement, intercompany agreement. We have seen if one company is supplying any service to other companies, sometimes they are charging VAT, sometimes they are not charging VAT. Both are, we can see case to case, but there should be some agreement too, because whenever you are providing any type of data information to the FTA, they can ask us to provide any type of agreement, whether employment agreement or intercompany supply agreement. If we would not be able to provide these agreement straightforward, they can reject our refund. Next slide, please. So these were a few cases where company are facing challenges to reply to the FTA within 5 working days, because after acceptance of VAT refund, if FTA is asking us to provide any data, information, documents, FTA will allow us 5 working days only to reply. So what we have done in this slide, you can see that any company should be ready with 4 main pillars for VAT purpose. So first of all the tax position for standard rated, zero rated or out of scope supply should be correct. Then the second pillar is accurate and complete data capturing into the system. Third pillar is maintenance of supporting document in the company, and fourth is reconciliation. I will take you through one by one. Next slide, please. Like as I have mentioned, tax position for standard rated, exempt, zero rated, and out of scope supply. There are only 4 type of tax position can be there as per UAE VAT law. So practically speaking, specifically in designated zone and free zones, where if any company is doing export, these are out of scope supply, but companies are charging zero rated. This is not a correct tax position. And many companies are importing a lot of services from outside UAE. They are not showing VAT on reverse charge mechanism basis. So this is not a tax correct position. These are just few examples. So first of all, before applying for VAT refund, company has to ensure that all the tax positions for sales and for procurement of goods and services are correct into their accounting system and returns as well. Next slide, please. Then the second pillar is accurate and complete data capturing into the system. Because after 2.5 years, if we are going to apply for VAT refund, FTA can ask us to provide that data into their desired format. We have given this format so that company should be able to know what type of information FTA can ask. Like for example, zero rated supply. For export, FTA can ask sales category, tax invoice number, tax invoice date, invoice currency, amount in foreign currency, exchange rate, tax invoice amount AD, then customer name, TRN, invoice description, goods delivered from, destination of goods, bill of exit number, amount as per bill of exit. So these are the detail FTA can ask. So the main problem is when we are capturing the data into the system, whether we are capturing the complete data or not. Because today, if FTA is asking me to provide all these information for last 2.5 years, it will not be possible to provide these information within 5 working days. And if we are not able to provide within 5 working days, straightforward, they will reject our refund and it will be carry forward. Next slide, please. Then third pillar is maintenance of spotting document. Every supply is in UAE is standard rated, means 5%. Export is zero rated, but there are certain conditions to apply zero rated, that every company has to maintain official and commercial document. Official document means custom declaration, like a custom exit certificate, and commercial documents means consignment note. If any companies would not be able to show these documents to the FTA while applying for the fund, the company needs to pay 5% VAT and the penalty as well. So what I'm trying to say, every company who are specifically into import and export, they have to maintain all the spotting document for export and import as mentioned in UAE VAT law. And when I'm saying about invoicing, invoicing includes all type of invoices, whether it's standard rated, zero rated, or out of scope supply. Because nowadays in VAT refund, FTA is asking to provide invoices for out of scope supply as well. And as I have already mentioned, that other document will involve all type of agreement. So if company has already all type of agreement, that's fine. But if not, company should prepare the agreement for supplying to other group of companies or every type of agreement for which I am debiting my expenses. Next slide, please. This is for reconciliation. Whatever data I am putting into my VAT return, this should always be matched with my financial statement, means trial balance, and my trial balance should match with all the ledgers into my accounting system, whether it's sales ledger, purchase ledger, output tax, input tax, non-claimable, and custom records. Whenever FTA is doing audit, or whenever we are applying for VAT refund and they are checking our data information, of course, they will match all these 3 figures. And if there will be any difference, we have to provide the reconciliation statements to the FTA. And if company would not be able to provide a reconciliation, then straightforward, they can reject our refund. So we are advising companies to be ready with all the reconciliation statement month on month or quarter on quarter basis. Next slide, please. This is the last how MBG can help for VAT refund specifically. First of all, what is our process? What we are doing? We are reviewing all the VAT return filed by the company for last 2.5 years. We are checking working papers and we are checking calculation of refundable VAT, and we are determining whether you have sufficient documents and supporting documents to claim the VAT. Because today, before going into this, if I am submitting the VAT refund application, and if I would not be able to provide the all data information and supporting documents to the FTA, they will reject my refund application. So what we are doing, first of all, we are preparing all the data and information in the template decided by the FTA. And if we see that companies has done some mistake, so first of all, we are filing all voluntary disclosure to correct all these mistakes, and then we are doing submission of VAT refund. Then what is the next? We are after doing submission of VAT refund, because we are the registered tax agency with the FTA. We have a team of tax agents who are managing all type of communication with FTA, and if we need, we are visiting to the FTA office to discuss about any challenge, like if FTA is asking any information, and sometimes FTA is not able to understand our view, so we are visiting to the FTA to discuss with the authority about their views on our VAT refund if we are not getting VAT refund on a timely manner. Thank you very much. And after that, if any of you have any questions in relation to VAT refund or VAT audit, I would be able to take these questions. Thank you very much. Oliver, to you.
Thank you
Oliver.
very much for your time, Tahir. So, ladies and gentlemen, we've received some questions inevitably on ICV and on the audit side of things. We'll just now open up the panel to the team so we can run through those. So I'll just try and narrate those questions. There's quite a few ICV ones, and I'll start with those. What are the advantages of ICV scores for companies that do not deal with ADNOC, DED, Abu Dhabi Ports, or Aldar?
That's a very common and a very important question as well. So I think, as we have seen, the ICV formula is designed in such a way because the ICV score of a company is dependent on the ICV score of their vendors. So it in turn creates a chain effect. So what happens is there could be a list of direct vendors who are directly dealing with ADNOC, DED, etc. So now they would, for example, they have a project into millions with ADNOC. And now they would definitely be subcontracting and purchasing goods and services from a lot of subcontractors. And now this second level of companies, the subcontractors, if they do not have the ICV certificate, that will in turn reduce the ICV score of the main contractor as well. So it has an impact on him. And that is considered very seriously because he in turn would have submitted an ICV improvement plan to ADNOC as well. So in any case, he does not want his ICV score to drop down because of his subcontractors. So he would start dealing with subcontractors who are having an ICV certificate. So it's not necessary that you need to be the first line of vendor to ADNOC or DED, even in case any of your customers. So that's where most of the inquiries come from. So generally you would get an inquiry from one of your customers requesting to get your ICV certification done because his ICV score is dependent on yours. So not necessary to deal directly with ADNOC, but you will want your ICV certification to get done to remain in business, to be competitive with your competitors, because your ICV score will be one important criteria along with your price in case you want to win future businesses.
Yeah. Okay. And I think one more on ICV here, Tahir, which I think you touched upon in your presentation, but maybe just repeat. If there are multiple companies under the same group in a single emirate under different trade licenses, will this be considered for a group ICV certificate?
Right. So I think, as mentioned, ICV certification is done on a per license basis. So each trade license will deem to have its own ICV score, irrespective of the fact that they are just branches of the other company or they are all within the same common ownership structure. Even the financial statements are prepared at a combined level. Irrespective of that, each trade license will have to make sure that it has its own ICV score. The only exception being all the branches within the same emirates can have one common ICV certificate. That's it. That's the only exception that is allowed. Otherwise, it is very clear. Each trade license will have its own ICV score.
Understood. And on the tax side of things, in case of rejection of VAT refund claim, can we lodge a claim again, and any timelines involved?
No, any point of time, whenever company is ready with all detail and information, they can again apply for VAT refund, and there is no timeline involved. Any point of time, any company can apply for VAT refund.
Okay, and there's also one which is slightly, I don't know if you can see on the Q&A session, Vipin, slightly a longer question. Maybe you can try and paraphrase that and
Yes,
explain that one to the audience.
Yes, I think this question is from Shahad. Upon preparing a VAT reconciliation of the GL account, and it is identified that a refund amount was underclaimed, FTA would need to refund the amount. More than a year ago, it is necessary to refile the return. Is it a voluntary declaration required? Okay, I got your question. Actually, there was not a clarity before 6 months, but I think 6 months back, FTA came with a clarification which says that if you forgot to claim any VAT input tax credit in your past return and you have already paid to that supplier, so you can claim that input tax credit only through voluntary disclosure. If 6 months has already been passed, if you have already paid the supplier, you have filed the return and 6 months has already been passed, then you can go only through voluntary disclosure. And the next question can be, when you are filing this type of voluntary disclosure, there would be any penalty or not? The answer is no, there should not be any penalty, because here we need not to pay any VAT. We are claiming input tax credit from FTA. There should not be any penalty when we are filing this kind of voluntary disclosures. There is one more question, Oliver, from Nadeem, Mr. Nadeem. In free zone to mainland invoice, VAT of the free zone company invoice can be claimed as input VAT. In free zone to mainland invoice, VAT of free zone company invoice. Okay, actually there are companies in free zone who are still charging 5% VAT when they are supplying to the mainland. First of all, it is very much clear from the very beginning, if any company is selling on ex-works basis in designated zone, it will be out of scope supply. And if they are selling on DDP basis, then they can charge 5% VAT. So I need to know more, like what is your, you are selling on ex-works basis or you are supplying on DDP basis. But I hope maybe you are selling on ex-works basis, then the supplier cannot charge VAT and the customer cannot claim input tax credit on the same. Both sides, it will be a wrong entry if supplier is charging 5% VAT and the recipient is claiming input tax credit. There is one more question from Jennifer. Is there an expiry in filing the VAT refund? What if 1 or 2 quarters has passed already before a refund was discovered? There is no issue at all. Even if you are filing VAT refund for 2018 today, you can file. There is no timeline at all. Any point of time, any company can file VAT refund for the earlier periods.
Okay, and there's a couple of questions on, will we share this? I think from Abdelaziz's side at Sharjah Chamber, they will share this. We will also share this on our links as necessary. So Abdelaziz and I will coordinate on that and communicate the same to everyone. Abdelaziz, that's correct from your side?
Yep, absolutely.
Okay. Great. And one more from the ICV side of things. Does MBG adapt to DD, Abu Dhabi Ports and Aldar as well as ADNOC? And is it possible to support the ICV score acquisition? Perhaps Tahir, you can answer on that.
I did not get that clearly, but I believe they meant is the ICV certification issued by MBG also accepted by DD. So as I mentioned earlier, the overall program, which was earlier only run by ADNOC, is now adopted by DD and other bodies. So the ICV certification bodies are common. So you can definitely visit the EDNOC website or the DED website to verify the list of certification bodies on their website, which they have mentioned. And the list is common. So, and the certificate has a common format as well. So the certificate that we issue does not, it mentions the name of the company and their ICV score and other details. It does not mention any fact whether this certificate is for EDNOC or DED or any third party. So the certificate belongs to the company and it can be presented to anybody. So the same certificate is being accepted by DED, the same certificate is accepted by EDNOC as well. So you have one common ICV certificate for all your tendering processes in the future.
Okay, I think we'll take a couple more questions and then wrap up. There's one just come in on the insurance side of things, Vipin, if you can perhaps address that.
Yes, one more question for the insurance with dependents. Do we need to ask the insurance provider for separate invoice for the dependent? The answer is yes, of course, because if we need to claim the input tax credit, we should ask insurance companies to provide separate invoices.
Okay. Okay, and I think that question has been addressed. How many days does the FTA require for approval or rejection of refund? I don't know if you covered that in your presentation already, Vipin.
Actually, what is the typical process? For example, today, if I am doing submission of my refund, VAT refund application, first of all, FTA can take 20 working days to accept or reject. So first of all, we have to see that whether FTA is accepting or rejecting our refund application. In 99% cases, they are accepting the refund request. Okay, and then FTA will send us an email. They will send us an Excel format. We have to provide the data into the format within 5 working days. So to answer, first of all, 20 working days to accept the VAT refund application, and then we will have 5 working days to reply on their queries.
I think in the interest of time, we'll wrap it up now. We've taken a bit over the allocated time. Obviously, there's a lot of interest. If you do have any further questions on either ICV or VAT, do reach out to the team here, Vipin, Tahir, or Abdelaziz as well. We will put the contact details up now. Perhaps Tahir, just there's one very last one which perhaps you can address immediately with regard to audited financials. Financials required for ICV certificate. If it's a company has financials audited by a non-approved auditor, do we need to get re-audited?
So to this,
and that will be the last question, ladies and gentlemen.
So as you mentioned, there are a list of 12 certifying bodies. So these are independent 12 ICV certification bodies. This has nothing to do with audit firms. So there are about 400 plus audit firms in UAE. So an audit report done by any one of them. So any firm that has an active valid auditing license within UAE and are allowed to provide auditing services, that audit report will be accepted for the purpose of ICV certification. So you don't need necessarily to get your audit done from one of the ICV certification bodies. So your audit report done with any firm that is authorized to provide an audit report will be accepted. Just one important point at the end here, we need to make sure that the audit report is not qualified, because in case there is a qualification in the audit report, you cannot proceed with your ICV certification. So in case you have plans on ICV certification, you just need to make sure that your audit report is clean. That's it.
Okay. Great. Ladies and gentlemen, thank you very much for your time today. Again, I'd like to thank Abdelaziz and the team at Sharjah Chamber for setting this up, and hopefully it's been of use to your members. We will coordinate how this is communicated out to everyone, Abdelaziz, but from our side at MBG Corporate Services, thank you very much for your time today, ladies and gentlemen. Abdelaziz, anything from your side?
Well, thank you very much, Oliver. Thank you, Tahir. Thank you, Vipin, for all your contribution. I hope all the participants had an informative session. So yes, indeed. And yeah, I'm looking forward for your upcoming session.
Okay. Thank you very much, ladies and gentlemen. Thank you, Abdelaziz. Thank you, Tahir. Thank you, Vipin.
Thanks, Oliver. Thanks, Abdelaziz. And thanks, everyone. Thanks. Take care.
Thank you.